Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Key, our Julia Borston has the details and the impact.
This is the 6th reported settlement, bringing Bill O'Reilly's total reported payouts to settle sexual harassment suits to $45 million. Fox says that while it was negotiating a 4-year contract worth $25 million annually with O'Reilly, it was aware there was a claim and a settlement, but that it was not aware of the financial terms, saying, quote, his new contract added protections for the company specifically aimed at harassment, including that Mr. O'Reilly could be dismissed if the company was made aware of other allegations. Fox noting it subsequently dismissed O'Reilly. O'Reilly's attorney saying, quote, the Times printed leaked information provided by anonymous sources that is out of context, false, defamatory, and obviously designed to embarrass Bill O'Reilly. Now, as for whether this latest scandal will impact approval of Fox's pending Sky acquisition, Fox says, quote, this matter was discussed with Ofcom, and this is also reflected in their final decision. Ofcom, the regulator, ruled Fox was a fit and proper license holder. Another British regulator, the Competition Markets Authority, is still in the process of reviewing the Sky deal now. Back over to you.
All right, Julia, thank you. So the question really is, could O'Reilly's contract revelations put Fox's Sky takeover in jeopardy? Again, let's talk with the lawyer who's been leading the legal war, your word, not mine, against Fox News. Douglas Wigdor represents 22 former and current Fox employees who have filed sexual harassment, discrimination, and retaliation suits against the company. And in May, Doug testified before the UK communications regulator on whether Fox was fit and proper to purchase Sky. Good to see you. Thank you for joining us.
Thank you for having me.
Did they invite you to testify, or did you volunteer?
They invited me. They knew I had represented a wide spread of current and former employees.
Were you surprised by that?
Well, I'm a solicitor actually in England and Wales. I went to Oxford.
On whether Fox was fit and proper to purchase Sky. Good to see you. Thank you for joining us.
Thank you for having me.
Did they invite you to testify, or did you volunteer?
They invited me. They knew I had represented a wide spread of current and former employees.
Were you surprised by that?
Well, I'm a solicitor actually in England and Wales. I went to Oxford and am married to an English woman, so I do have a great affinity and appreciation for the English people, so it didn't come out of the blue.
You think you'll be called back?
I do think I will be. We're actually submitting tomorrow correspondence to the Competitions and Markets Authority based on some of the things that have happened since I was there in May. And based on that and based on the people that I'm talking to, I think that I probably will be either called back to the CMA or even perhaps Parliament if they have hearings.
I mean, forgive me, but I wonder, I'm curious why you would be called to testify in this particular case. This is about them being able to buy another company, and whether or not they are fit to buy that company. You're suing them. Of course you're going to say they're not fit, right? I mean, do you have an axe to grind here?
Well, that's a good question. I'm glad you asked it, actually, because what they're trying to determine is whether Fox should purchase Sky, the Foxification of Sky, whether they meet the broadcasting standards, whether or not they're fit and proper. Believe it or not, I have not told the Competitions and Markets Authority or Ofcom or the British government what they should or shouldn't do. I have not made any recommendations, but I do feel obligated that I have a lot of information, 22 clients, and I believe in transparency. That's why I've asked Fox to lift the confidentiality agreement so that they can make an informed decision. I'm just part of the process. I'm giving them information. They can do with what they feel appropriate.
Okay, so based on your 22 cases and your 22 clients, what will you tell the regulators as far as the corporate governance at Fox, whether the Murdochs are fit and proper, and whether the leadership pays close enough attention to issues like this, which seem to be blowing up by the day? Especially
bearing in mind that they keep saying they've changed leadership there as well.
And you've made a lot of changes.
Well, they said that, don't forget, after Roger Ailes was terminated. And now what we learned from the New York Times piece this weekend is that in April of 2017, at the very same time that they're trying to convince the public that they've changed things, everything's great, they are not only renewing Bill O'Reilly's contract for 4 years with these revelations, but they gave him a pay raise to boot. And not only that, when you read the article, you also find out that their general counsel, Gerson Zweifach, was also trying to think about hiding that information from the U.S. Attorney's Office. So what you really have are systemic issues from the top, from the Murdochs down.
I'm coming off really cynical here, but another part of me thinks, okay, you're doing this to gain leverage with the company because you're in negotiations with them. And if you can use this as leverage with them to get a better settlement, maybe you don't go the second time if you get decent settlements with your 22 clients.
Well, you know, I'm just trying to represent my clients zealously under the auspices of the law. I have never tried to use this in my negotiations with them. I'm going to continue to do what I do while I represent these people. I feel, as I said, that the public at large in Great Britain has a right to know this. Fox has tried to say and insinuate what you are suggesting, but I'm just informing them of what I know. And there's a lot to be shared. I mean, I represent Rod Wheeler in the Seth Rich murder fake news case. I mean, that goes to the very heart of broadcasting standards, and whether the British people want the Foxification of Sky is a serious issue for them to consider.
What's your sense of the British regulators and how carefully they're considering these specific claims by your clients and the whole sexual harassment issue in part of the decision about whether they are fit and proper to own all of Sky?
I think the British government, from what I can see, is following this very closely. They originally were going to make a decision right about now or earlier. They've now prolonged that investigation, which is going to, by all accounts, go into next year. They have put a lot of resources into this investigation. They're speaking to a lot of people. A lot of people are making submissions on both sides. And I suspect that at the end of the day, the Prime Minister, who doesn't have a majority in Parliament, who's in a coalition, is going to have to listen to all sides of the argument and ultimately make a decision that she feels is in the best interest of the British public.
Doug, thanks for stopping by.
Thank you for having us. Appreciate it.
Attorney Doug Wigdor joining us here at Post 9 at the New York Stock Exchange. So from McDonald's to Microsoft, this is going to be the busiest week of earnings this season. Bob Pisani will have some key numbers for us to watch coming up next.
And then coming up on Fast Money, one Wells Fargo strategist lays out why he isn't more bullish on this market rally. Scott Wren coming up.
As we mentioned, this week will be the busiest of the earnings season, with more than 170 S&P 500 companies reporting, and I think most of those are on Thursday. Bob Pisani joins us now with the numbers to look for. Robert?
And the important thing is the numbers are good, but heaven help you if you miss. We're going to show you one in a minute that's in a lot of trouble after the close. Just want to show you the numbers for the quarter. Now, the numbers for the third quarter are a little lower than the other numbers that we're seeing for the rest of the quarters here. Double-digit gains in Q1 and 2. Expecting double digits in Q4. 3.8 doesn't seem very great. There's two reasons why this is happening. Number one is the effects of the hurricane, and that's the biggest one. If you take a look at the insurance companies, they're really taking it on the chin this quarter, down about 60% in their earnings, and that's because of the effects of the hurricane. So when you have insurance companies down 63% in the earnings, the banks are doing okay, but everything else is in trouble. You see how that's dragging down the overall financial group. The other issue is what's going on with energy. A lot of the energy oil and gas companies also had shutdowns from the hurricanes. They're being affected. The other thing is, it's just the numbers are changing a little because last year we finally started to see a little bit of a rally in oil, and so the profits started getting a little bit better. Remember, 2016 was a complete disaster for the oil companies, and now this year you get these crazy numbers up 500% because their earnings are starting to come back. So the comparisons are a little bit tougher going forward here, but overall the numbers really are pretty good. Here's the problem. Heaven help you if you miss the numbers. And I don't care whether you're making, you're up for the year or not. Do you see what's going on with Whirlpool here? They missed by 10 cents. But the guidance for the rest of the year is kind of poor. Look at that. And by the way, this is not a big winner. Whirlpool was already down on the year. Right. So you can imagine what would happen with some of these other names. The point is, with stocks this high, they are not giving any break to any company that misses on the numbers. You do better, you might get a little pop, a modest pop, 1.5%. You miss.
It's not just bottom line. I mean, it's revenue beats that people are looking for now, actual revenue growth,
right.
and better outlooks for the future.
We had that revenue recession for a while. I'll be interested to see how the market responds to McDonald's tomorrow morning. Here's a stock that has skyrocketed, is sitting at all-time highs, seems to do no wrong lately, but you wonder how the market's going to respond tomorrow morning, especially if the guidance isn't as strong as they hope for.
It'll heaven help you if it doesn't work out. But management has been great. They've been making menu changes throughout the year. That stock's got a lot of momentum behind it.
So themes this earnings season. You mentioned the hurricane impact. We'll see that in energy and insurance probably. Weak dollar, I mean, you're starting to see that. You saw that with the IBM.
Yeah, although the dollar's turned around a little in the last month. Just
but that always
bit.
hits with the lag, so they should be feeling it now, which I think was why P&G was a little disappointing in some
definitely
of the others.
a factor. The key story is this. Earnings are essentially at historic highs. We're essentially at historic highs. I want to quibble about a few pennies. The global economy is continuing to expand, and that's what's powering the market. Stocks trade on a perception of forward earnings. 4 quarters is what I take, this quarter and 3 quarters out. And when you see the numbers there, they're at historic highs. And by the way, they are not accounting at all right now for any tax breaks. In our heads, emotionally, I believe there's a premium in the market for tax breaks. I hear people say anywhere from 5 to 10%. But the analysts themselves are not incorporating any numbers. And if that does happen, they're going to raise the earnings numbers for 2018.
It'll be interesting to see if management comments at all on expectations for tax reform, planning decisions, and that sort of thing. Thank you, Bob.
Okay.
See you later.
John Hancock customers can get an Apple Watch for only $25, but of course, there is a catch. We'll tell you all about it next.
Video